Hey, this is Byron, and I'm highly pumped up right now because I'm talking about options trading. Options trading, this is basically options 101. I don't recommend it for beginners because you can lose a lot of money. But today we're going to talk about, I have some friends talk about it with me. A great person is coming up too, which will be me. I had a training session on options, and you're going to see my picture up there. I'm highly motivated, highly excited because I love talking about the stock market. And please like, subscribe, and share this video and leave comments because I'm doing the best I can to teach the stock market. This is what I do 24 hours a day. I am a professional, and I live and eat the stock market, and I'm highly good at it. I'm 25 out of 27 towards getting stocks right. I'm making a lot of money for investors. A lot of people trust my judgment, and I am the stock master. Yes, I am. But today we're going to talk about options trading, options 101 for beginners. I'm going to talk about the strike price, what it means. I'm going to talk about what buying one contract mean when it comes to options trading. I'm going to talk about the premium or cost. That's very important. Like I said, please leave comments on what I'm saying. I'm going to talk about options, period. How it means pretty much insurance. I'm going to speak on that right there. I'm going to talk about predetermined date or expiration date. That's basically what you're buying options for. The difference between day trading and options is you have to sell it at a predetermined date or before, as long as you reach the strike price. But I will explain that in my video. Okay, I'm going to talk about what a call means, what a put mean, all that. And last of all, you know, is a couple of secrets when it comes to options. You can sell if you reach the strike price, you can sell early. But I'm gonna talk about that. This guy coming up is the greatest of all. He is the greatest of all, and I want you to listen to what he has to say. He's the best stock person in the world. I'm gonna talk him up. He's coming up next. He's gonna help me out with this. And here we go. The Stock Master 2, I call him. And here he goes. He's gonna tell you exactly what to do, some do's and don'ts. Here we go. Hey, this is Byron. Hey, this is Byron, and I want to talk about options trading. Okay, this is something I'm very good at. All my friends wanted me to talk about it, and family members. Now, options trading is not the same thing as day trading. It's a different scenario. Of options trading, you are buying contracts. There's a difference. One contract is 100 shares. I'm going to show you on my board when I get a chance. Um, you have you have the option to buy a certain contract at a certain time. That's all you're doing. And when you look at the screen, say you get a brokerage account like E-Trade or Ameritrade or Charles Schwab, whatever, it gets intimidating when you see the screen. But there's certain things you only need to look at: the strike price, what the stock is selling at, and how much the premium is or how much the cost is. Or if you're doing a call or a put. A call is when you want the stock to go up. A put is when you want the stock to go down. I'm going to keep everything in layman's term. Everything's simple for you. This is options trading I am training on right now. Okay? So that's basically the basis of it. You're buying contracts. Remember, one contract is 100 shares. One contract is 100 shares. I want to emphasize that right there. And that's what makes options so dangerous. I kind of recommend it to advanced traders, not beginners, because you can lose a lot of money real quick. I really mean that. Because you can buy more stock. Why buy 100 shares of something for $2,000? When it comes to options, you can buy that 100 shares for like $20 or $30. See what I mean? You have more capital. So you can buy, if one contract is 100 shares, you could probably buy unlimited amount of contracts. But that's what makes it so dangerous, because if that stock, I want to emphasize that, if that stock do not get to that strike price, it's a certain strike price you want to get to at a certain time period, you can lose so much money. And I have done that, trust me. And I'm not trading options right now, but last week I traded it. I made money because I have a gift and I know the trends of stocks. But remember, the pressure that you put when it comes to options, there's a certain amount of pressure on you because there's a time period. You only have up to a certain amount of time to sell that stock to get into money. Follow what I'm saying? You only have a certain amount of time to get to a certain price to get into money. Because if you don't get to that price at that time frame, you lose money. As simple as that. Now let's go to the board. I'm going to show you a couple of examples because I'm watching my videos and so many people are making it so confusing. So I'm going to make it as simple as possible. This is options trading. Okay, the guy was great. That was me, by the way. I did so many videos on options trading, but it's pretty much teaching you to come to do's and don'ts and to give you an understanding of options trading. So I just wanted to bring that up. You can, like I said, like he said, that's me. You can lose a lot of money doing it because you can buy, say, 2,000 shares for $20 when it comes to options. But if it don't make the strike price or it don't make the expiration date of the price that you want it to project, you will lose so much money. It's a very dangerous thing, and I really recommend it to people that's really been doing stock for a while, not for beginners. I recommend doing a long-term trade or short-term. Is safer when it comes to the stocks. And the basic thing I'm trying to give you is an understanding of the stock market. Today I'm giving options trading. Next week I'm gonna give a seminar on swing trading, and then I'm gonna give one on futures trading, and then I'm gonna give at the week after that I'm gonna give some information on short term, and then the week after that I'm gonna give some information on long-term stock trading, and then cryptocurrency. I know how to do it all. I'm really good at this, but my forte is short term. But I got another friend that want to talk to you a little bit more to give you a little bit more knowledge about options trading, and here he goes.
Oops. Thank you so much for joining me in this options trading for beginners video. This is your complete guide to options in the stock markets. This includes call options, put options, covered calls, and cash secured puts. If you want to become a more powerful investor in the stock market, then watch this video. This knowledge will level you up. Now for this video, I want to tell you, no rush. Take your time. There's certain parts of this video that you're going to want to rewatch, and it's most likely going to take you more than one sitting for you to digest all of this information. That's going to be normal. So please subscribe, and we're going to start with call options. Okay, so let's break this down to the fundamentals. So what are options? Options are simply contracts. They're options contracts. So it's essentially a deal between you and another person. So I want to show you this from the perspective of the buyer. So in our example, you will be the buyer of the options contract. And again, this is a call option. Now we'll just pick any stock. And in this example, we'll use Yelp stock. So the price of Yelp is at $35.84. But to keep it simple, let's just round it up and say that Yelp is at $36 a share. So what if I tell you, I'll give you the option to buy Yelp at $38 a share in the next 30 days. And for you to have that option, you pay me 80 cents. So is that a good deal or is that a bad deal? Well, honestly, it's hard to say because we don't know if the stock price of Yelp will go up or down in the next 30 days. But let's just say that you buy that contract for 80 cents. And now you have the option to buy Yelp at $38 within the next 30 days. So here's how you win. The price of Yelp right now is at $36. So let's say that within the next 30 days, the price of Yelp hits 42. Then in this situation, you're going to make good money because here's what's going on. So the options contract that you bought was a call option. So you paid for the option to buy a stock at a certain price within a certain amount of time. Now in our example, Yelp hits $42. So you have the option to buy Yelp at $38. So would you buy Yelp for $38 in this situation? So the answer, well, it should be, of course you would, because you could buy it for $38 and then immediately sell it for the going rates of $42. And then you end up with a gain of $4 a share. So here's what your profit would look like. You buy Yelp at 38, you sell it for 42, but you have to remember that you paid 80 cents to have this option. So you net a profit of $3.20.
So I hope that gave you a little bit insight when it comes to options trading. That was some basic layman's term what he's trying to do is give you just a slight understanding about options. He's very intelligent and I know him very well. So my next person is the greatest of all, which is me again. Myself, is gonna take you to the board and explain a little bit more about options trading. Stay with me. Here we go.
Computer around? There you go. That's my screen. Now, you're trying to get to a certain strike price. Pictures in there? Yeah. You're trying to get to a certain strike price. Say Yelp stock. I'm using Yelp as a stock. Right now it's trading at $35 a share or $35 and some change. But say let's trade 36 to give an example. This is an example right here. Say Yelp is trading at $36 a share. That's where my fingers at. And in 30 days, you wanted to go up to 38. In 30 days, you wanted to go up to 38. Okay? In 30 days. If that stock do not get to 38, you lose money. And one thing I was saying about a cost or a premium. See, say the cost is, because every strike price have different cost. Say the cost is 80 cents. That's why I wrote it down, 80 cents. Now, one thing about cost and strike price, the longer you want that stock to get to a certain destination, a certain price, the lesser the cost is, the lesser the premium is. That's something to remember. If you want that stock to get from 36 to 38 in 1 month, your cost is going to be very low. But if you want that stock to get from 36 to 38 in 1 week, that cost could be like $3 or $4. I'm sure it could go up a lot higher per share. Remember, one contract is 100 shares. I'm trying to emphasize that. Okay, now Yelp price. We're just speculating here. Yelp price is at 36, and you want to get to 38 in 1 month. Okay, that gives you the option to buy it at 38. Now, say that stock Yelp gets to 38 exactly. That 30 days, your time is up. You have to sell that stock before or at that time. Say it gets to 38. Did you make money? No, you didn't, because the cost. You still had to pay for the cost right here. So you needed to get to, an example, you needed to get to like 30 or 41 or 42, whatever. You know, you just want to get a little bit higher, or 39 or something like that. Because you need a little cushion, because you still got to pay for the cost or the premium. Some people say the premium, some people say the cost. That's just stock market talk. And this is basically what I'm talking about is stock options 101. Options 101, that's all I'm talking about here. There's a lot of more technical things that you need to know. But this is an example right here, this screen right here. It's at 36. You wanted to get to 38, say it gets to 42. You made $3.20 per share, because you still have to pay that 80 cents per share cost or premium. See what I'm talking about? So just because it got to 38 or 39, that don't mean you made money yet. Well, 39 you did, because you made like 20 cents, but that's nothing. 20 cents on 20 cents per dollar. Okay, the next thing I want to get to, and this is just an example here. Okay, strike price. First of all, the 38 is the strike price. It's selling at 36. 38 is the strike price. Strike price is giving you the options to buy at a predetermined date. You want 30 days or 1 week. And that's why you have to pay a cost or a premium, because they're allowing you to have the option to buy a certain stock at a predetermined date.
Hey, I'm back. I hope you got a little bit of understanding about options trading. I had another friend to come on. He wanted to come on, but I'm going to save that for my next video. But like I said, my next video, I'm going to talk about swing trading, or short-term or long-term trading. I'm going to talk about the mathematical part of the stock market, the EPS and the PE, which is price per earning, and earnings per share. Outstanding beta and stuff like that. I'm going to talk about a lot of stuff that you're not familiar with. Basically, I want to give you an understanding of the stock market before you go out there and buy your first stock. Now, the main thing I need you to do is get your online brokerage account, which I'm going to bring a video about that as well. And that could suggest to you some online brokerage account companies to buy and what to look for, things like that. I really get motivated when it comes to the stock market, and I hope I helped someone out. Like I said, please like, subscribe, and share my video so my videos can get to you immediately. I don't have a hot stock for you. On my last video I did. MU is pretty good, and AMD is pretty good too. Micron Technology. But I'm going to have they're kind of costly. I'm gonna get another stock for you that don't cost that much, but I really want something that's gonna make money for you. And you got to decide if you want to do long term or short term or how you want to do that. But with that being said, this is the Stock Master. Thank you for your support. Thank you, YouTube, for giving me the platform to do this. And I am very religious. Thank you, God Almighty, for giving me the strength to do this. Like I said, please like, subscribe, and please share this video and leave comments and your opinion on my videos to help me out too, like I'm trying to help you out. We're a team here. We're a team, you and I. And I'm doing the best I can. I just got out the hospital. I have a problem with my kidney, but it's getting better. I have to take medicine and drink a lot of water. And please help me out with that too. That's the most, life is the most important thing. Anyway, I'm gonna end it right there. Thank you guys. And I'm trying to think what my next video is going to be. It's so many things about the stock market I want to talk about, but I'm going to end it right there. So thank you. Thank you so much for your support. Bye-bye.